Software artificial intelligence companies are disappointing. I really think this is the way forward. That software artificial intelligence companies disappoint. That's mostly because remember what started the AI revolution. What started the AI revolution was Nvidia. Nvidia following GPT, right? We had GPT. It's like, look, oh my gosh, we have this incredible chatbot. What now? We have services like MidJourney that you can plug into Discord and have beautiful images as well. And we need a lot of GPUs to process this sort of data and information and content creation. And so we get a couple great pieces of software that turn into everyone in the world wanting to create another great piece of software, many of which just built on the backs of OpenAI, and then obviously subsequently Nvidia and otherwise. And all of a sudden there's this thought that all of the legacy companies, the Snowflakes of the world, the DocuSigns, the CrowdStrikes, the Cloudflare, that all of a sudden all of them are going to become fantastic AI companies overnight. And so far, that appears just not to be the case, especially after you read the earnings calls at Snowflake, where you get a really good heads up that maybe the CEOs themselves aren't even that confident. But not only is it the CEOs that aren't even that confident about their ability to actually generate profits from artificial intelligence, but it might not even be sort of the tech bros that are generating the biggest revenues for software. It might end up being healthcare. So then the question is, okay, well, is it the healthcare companies themselves that are going to make most of the money, or is it these other companies that are going to make money from AI? That's the big question right now, is who's actually going to make money from AI, and who it's not, apparently, is Oracle, with apparently now suggesting that their results, the street now suggesting that the results of the Oracle earnings are raising questions about the timing of generative AI demand, turning into revenue across the broader business cycle. And quite frankly, I looked at this and I'm like, duh. Like, the whole AI stuff started about 6 months ago. This is really when things, maybe February, so it was 6 to 7 months ago. How do you expect these massive software companies to turn around and start, all right, that's it. We know exactly how to make money with this? They don't. Snowflake literally said it best in their last earnings call. Snowflake and their CEO literally made the argument that, everybody's kind of just been thrown into this foray and nobody's figured out how to make actual money from it yet, except for Nvidia. And obviously, therefore, subsequently, the chip manufacturer. So, my opinion is, again, if you're looking at those software artificial intelligence companies, probably just something to keep in mind that it might end up taking a little bit more patience. Now, one thing that, when it comes to software, software companies that people do like in the artificial intelligence play has to do with advertising and data centers, and specifically Trade Desk, Facebook, Meta, and Google, potentially still being, and AWS as well as Microsoft, potentially still being up there in terms of opportunities to invest in AI, where you're kind of at that next layer where you've kind of got, right, if there's OpenAI and then there's all the chip stack underneath it, all that has to run on servers. So how about the server providers, which Oracle is as well, right? And no surprise, these server revenues, those do well. But the question is, what about all the apps that run on them? Are those actually going to make money? And a lot of that is in much more doubt now than people had hoped. But anywho, I mean, you look at sort of the hopium that went into some of these plays as well. I mean, here's Oracle. Look at the hopium. It went from like $59 in November straight up to $126. I mean, okay, big deal. You're down 8% now in pre-market, but you're just back to this support level where you've been bobbing around before. So maybe it's actually not that crazy from a stock point of view. I know when people hear, oh my gosh, stock's down 8% or whatever, even 10% in the day, it's a big deal, but stock's done very, very well here. So maybe this isn't that big of a deal from a stock price point of view, but in terms of this happening again, just wouldn't surprise me to see it happen again. These services are going to be, I think, a lot harder to sell than people think. Mostly because every company's like, oh yeah, we'll turn on the AI button. Maybe AI businesses aren't really going to be able to figure out profitability. This is actually something that we've talked about since the beginning of the whole AI dilemma. The beginning of the whole AI dilemma, I suggested probably the best place to invest would be chips. And I was also heavily exposed to chips, and I wasn't saying that to be biased. It was just simply to say that if everybody goes all in on AI, the one place you can guarantee is going to make money are the chips. Look at what Intel's doing lately. It's one of my favorite value stocks I have a good chunk of exposure to. It's been doing excellently. I actually still think it's highly undervalued. But it's not just Intel, which is launching its own 3 nanometer fab. Actually, that is going online here in 2024. But it's TSM, it's ASML, it's your Nvidia, it's your AMD. And my concern was that the SaaS companies would not be able to catch up with actually providing accelerated revenues because they won't be able to figure out, okay, how do we now convince people to actually spend money on AI? The slowdown that we've noticed yesterday in the Snowflake optimism in their last earnings call, which I encourage you to read, somewhat foreshadowed what C3 AI talked about, which I want to talk about in this video. But just to quickly remind you, in the Snowflake analysis, we realized that in Snowflake's earnings call, even the CEO feels unconfident about how much AI revenue there's going to be. They feel like companies are sort of getting thrown into, sort of jumping into the pool of AI, and then everybody's kind of like, okay, now what? Like, how do we make money here? C3 AI, which in my opinion is mostly a fraud. Okay, that's a harsh word. Maybe they're not a fraud. I just think they're like, I think their product is not really proprietary. I think their product is their stock. I'm being very aggressive here because I don't like the company. I think it is a company that is going to perform very poorly. And I've actually always been pretty anti C3 AI. I think that mostly you have institutional investors who are like, I need AI exposure. Let me put AI into Robinhood. AI. Oh, C3 AI, Enterprise AI. Oh, invest. That's honestly how I feel about C3 AI. Like, I think the only reason the stock has actually performed decently this year is because people are not looking at the fundamentals of C3 AI because they're trash. I'll pull them up too. But most importantly, we got to talk about what's recently happened here. So you've got C3 AI. It's up about 149% year to date. I actually think it has a lot more to fall, and it has recently fallen a chunk. You can see that here from its highs right around August 1st. It's down about 37%. Highs around the middle of June. It's down even more, down about 40%. You've been on a recent downtrend here with a little bit of a recent correction over just the last couple of days here of about 12%. And so a lot of folks wondering, okay, Kevin, what happened? Well, I don't know, but we're going to find out together. All right, ready? And then we'll go look at the fundamentals of it. So C3 AI gave lackluster sales forecasts and said profitability will take longer than expected. Fueling anxiety, the software company is struggling to capitalize on an enthusiasm for artificial intelligence. Folks, this is absolutely no surprise. This is exactly what I've been saying on this channel since the AI hype began. It's going to be very difficult for these companies to actually convince, especially regular consumers, to just spend a lot of money on AI. Most consumers have no idea what they're doing with artificial intelligence. And I'm not saying that to like insult people. It's just, I think people have gone in, they've tried GPT 3.5, they're like, haha, that's kind of cool, and then they never use it again. You know, they find an excuse to never use it. And not as a pitch, but like one of the courses I made, how to make more money and get SH9T done faster, is on productivity and building your income in that. You can see all the courses at meetkevin.com. We have a whole AI section in it. And what I designed the AI section around is how can you actually use AI? Like, not, oh, let's find every AI tool that exists in the world and go, wow, look, there are 2,000 AI tools. Nobody cares about your 2,000 AI tools. Most of these companies are going to go straight bankrupt. Like, if I were a venture capital fund, I would be allocating pretty little to all of these crazy AI software companies unless they really were able to prove that they actually had revenues, which I actually don't think they're going to be able to do. So what you end up stuck with is a lot of companies burning a lot of money on server usage, and most of them were going to go bankrupt. And then you'll see server usage stabilize, and then demand for like Nvidia chips and all that sort of stabilize. But I do think it's interesting because, you know, you can jump on over to some of these, and I want to look a little bit more at some of this news headline, but this was from, this was the 9 months ending in January, so not the most recent earnings report, but the one that I was basing my frustration on C3AI. Here's a company that loses it loses about $50 million a quarter, 142 in 9 months. And plant, property, and equipment, if you look at free cash flow, you're actually at about $200 million lost in a 9-month period. If you look at revenue growth over the year, their subscription growth is flat. Their total revenue is actually negative. Their gross profit is negative, which means their net loss almost doubled. So it's just disgusting. They've got about $800 million of cash, about $60 million of bills. So they still have cash. They could last a few years, and they'll end up burning this and I think bleeding out unless they can figure out how to make some more revs. But anyway, the fiscal year adjusted loss is now expected to be as much as $100 million in actual loss. So when you consider free cash flow, it'll be even more than that. In previously released forecasts, they were expecting a loss of about 75 mil. So actually expecting more of a loss. That's kind of crazy because it's like, we're expecting a $75 million loss. Now we're losing more money, now AI comes out. And guess what? We're losing even more money. Oh, geez, it's just embarrassing. So C3AI said it no longer expects to make a profit on an adjusted basis in the fiscal fourth due to new investments they're making into, oh yeah, okay, listen to this. Oh, this is another thing I absolutely despise. Okay, they're not making new investments into R&D. You ready for this? New investments into sales and marketing. Oh, no. Like there's some level of sales and marketing, obviously, that's necessary. For example, if I say your opportunity to buy any of the individual courses on building your wealth, stocks, 0 to millionaire, real estate investing, building your wealth, whatever, is going to go away because they're all going to be bundled together as one larger and more expensive set of software, and it'll be more expensive if you don't buy soon. If I don't mention that, then obviously you don't sell. But then if the only way you're trying to grow is not by innovating, doing research, and adding more value to your product, which I do all the time, and all you're just doing is running more like Google ads, let's say, then are you really a good product? I don't think so. Yeah, personally, I don't run Google ads. Maybe we should a little bit. A little bit of remarketing never hurt. But anyway, the market opportunity is immediate, and we intend to seize it, says the CEO. Right. They intend to seize it not with more R&D, but rather with marketing more. Yes, let's market the stock more, because that's actually usually all I see them market. It's kind of crazy. Some investors will remain skeptical about the company. It is the most shorted U.S. stock as a percentage of shares traded. Wow, really? Let's look at the short interest here. Let's see here. So if I go to the apps portal, I'll go ahead and pull this up, but I'll keep reading this in the meantime. So C3AI, most shorted shares have recently dropped a bit. C3AI projected sales, 72 to 76, current period, lower from the average estimate of analysts. Okay, great. Oh yeah, this was another big thing with C3AI. I remember going through this when I went through their last earnings call. That they have one client that represents 1/3 of the business. Yeah, actually, I think I have it highlighted in here somewhere. But it was Baker. Yeah, here it is. Baker Hughes. Basically, Baker Hughes makes up about 1/3 of their revenue, and this is an oil field contractor. And what's kind of wild is this company actually sold about 1/3 of the stake they had in C3AI, which a lot of people are looking at and saying is a signal that Baker Hughes is like, yo, the AI you guys have isn't that great. So we're just going to start like dumping some of your stock as we, try to recoup what we can on the fact that we're stuck in a contract with you. Oh, rip. So, anyway, the C3 AI hype, not a surprise that you're suffering. Not a surprise that DocuSign is complaining. Not a surprise that Snowflake is complaining. That's what's made me very nervous about the software stack for artificial intelligence. But, oh well.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.